Hey everybody, this is Jose. We are about to start. It would be great if you could give me a quick confirmation on the chat box so I know that you hear my voice and we are ready to go. Thank you so much. I'll just wait for your confirmation so we start. Very good. And the timer just got to the end, meaning that we are just reaching the time to start the session. Very good. I can see the sound is good. Thank you so much, guys, for your confirmation. I'm looking at the chat box right here, right now. Let me turn on my webcam as well so you guys can see me. How are you, everyone? Pleasure to be here in the last trading session of the year. We're still getting together on Sunday for sharpening purposes, but the markets would be closed at the time. So really, this is the last one of the year and very exciting times. Anyway, so let's get started. Welcome to the session, everyone. Today it's December 27, 2019. My name is Jose Blasco. I will be your guide. And today I'm guiding you in the world of longer term trading. As most of the times, we'll be exploring the markets from two angles. We'll be using options. We'll be exploring from the angle of directional trading. We'll be exploring the markets from the angle of non-directional trading, looking for those different type of opportunities, planning them. And as long as the trade setups meet our rules, then we'll execute. 29 minutes from now, the US markets will open and begin trading. Therefore, we'll be free to go when it comes to execution. And that's exactly what we're going to do. That's the plan. Okay, very good. So anyway, haircut, yeah, what? I think it's about the same, Dirk. Sometimes a little shorter, sometimes a little less short, but about the same. Yeah, so anyway, so disclaimer, so we can start. Disclaimer, the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And this is the disclaimer. Therefore, the session is now formally introduced and we are ready to jump into our beautiful trade station, looking for the different setups that I was referring to. Okay, so sorry for that. In order to find our setups here, okay, I'm having a little issue when activating my drawing tool. Okay, so I'll take care of that later on. But anyway, basically, we have directional opportunities here to the long side. That's the meaning of the D and the upper arrow. Directional opportunities to the downside. This is the meaning of the letter D with the arrow pointing down. And then we also have the non-directional opportunities, which is where we're going to start, where those opportunities are going to be purely non-directional. We're going to find setups where we understand the market is likely to trade sideways, remain in a range for a while. And in that sense, we're going to be selling options above and below that statistical range and collect premium and let time pass, allowing for those options to expire worthless and therefore keeping the premium as long, of course, as the market behave as expected, which in this case would be to remain in such a range of price. Okay. But anyway, so we'll start with that. Also, for the ones of you that may not be part of our sessions all the time, I want to point at the time. It's 9:03 a.m. in New York as we speak. So 27 minutes from now, the market will open. We all know that. What you may not know is that 10 minutes before the open, most of the option chain reset. Okay. Therefore, we basically got 70 minutes to put trade plans in place for non-directional trading, because after that time, the option chain will become, everything will be zeroed out. We'll not be able to use the option chain 10 minutes prior to the open. Okay. So basically, we're going to spend now, let's say 15 minutes looking for trade setups. The moment we reach 9:20 a.m. New York time, then we'll switch from non-directional trading to directional trading, because there is more work to be done on the charts when we look for directional trades. And then after the market opens, we'll be again allowed to go back to looking at the option chain, being able to observe options prices, etc., and plan the trades. Okay, so again, for the next 15 minutes, we're going to be exploring the world of non-directional trading. I've been running the scans. We came up with this list of stocks. Let let me move to the left side of my scan. Here we go. So we got stocks such as Hume, XOM, Walgreen Boots Alliance, Philip Morris, Procter and Gamble. All those stocks qualify based on our criteria, where stocks that are not trending in any particular direction, they are likely going to remain sideways based on their current market condition. And also, very important, the price of the options seems to be juicy enough to show up on the scanner as potential opportunities. Of course, we're going to start with stocks that are trading at $100 and above, such as IBM, for example. And the reason why is because, of course, we want to waste the least amount of our time when looking for trades. And we know that the options prices derive from the underlying asset, where the higher the price of the asset, the higher the price of the options. And therefore, it's going to be a good beginning to start with stocks which are $100 and more. And it doesn't mean we cannot find good opportunities with stocks that are cheaper, but certainly normally it's going to be easier to find those opportunities with stocks that are higher price points. And therefore, an easy way to approach it is $100 and above. That's going to be our starting point. Okay, so now here when looking at IBM, we got a bad news. UFO performance stats show us 45%. That is not acceptable. We're going to move to pre and post market to see what's the data. And now it's 49.59. And that is indeed acceptable. Okay, so we did find proper probabilities. Typically, we go for 50%. That's a must when we trade directionally speaking. When we trade non-directionally, we are okay to execute trades up to, or with a minimum, I should say, of 48%. Okay, so 49 is certainly above. So that opens the door for us to look deeper into IBM. But also, before I get deeper into analyzing the chart, I also need to bring Yahoo Finance, because remember I said a minute ago that the scanner looked at IBM as a stock that provides options with high price value. And of course, the concern is always the same. Is it because earnings are about to happen?
Los partidos no han...
We just got some ad playing in the background in this website. So what I was saying is that the concern would be that maybe the reason why IBM is showing us high prices for options is because earnings are too close. So we're going to be able to see that using Yahoo Finance, that is pointing at January 22nd as the date for earnings. So what does that mean? Well, that means that if we look at the calendar, okay, the next Friday is going to be January 3. Okay, let me move into January. So we got January 3, January 10, January 17. Those are 3 Fridays that we could use when it comes to the expiration date. But now January 24 would now be after January 22nd. And therefore, January 24 would have earnings priced in. And therefore, we may be in trouble by using that expiration date. Okay, so long story short, we're going to be using either January 3 or January 10 or January 17, avoiding expiration dates that are after earnings. That's what I meant to say. Okay, so we're going to stay with expiration dates prior to earnings, meaning up to January 17. Okay, so I'm explaining something that probably you all know, unless you are watching this session for the first time or you are new to our sessions. But again, it's critical, so I wanted to phrase it clearly before I'm about to start doing this at a faster pace in the following opportunities, but I wanted to phrase it clearly at that time. Okay, here we go. Now I'm looking at your note, Dirk, where it seems that the data that you're using is showing you earnings for IBM not to be on the 22nd, but to be on January 15. And this is the problem of using free websites such as Yahoo Finance. Even though Yahoo Finance is not bad, sometimes you will see these things happen. Okay, that where other sources of data may give you information which is contradictory. In this case, your options data is suggesting earnings